Well, the session seemed doomed right out the gate after negative reactions to most earnings releases, even though they were clearly beats. And this theme of, quote, as good as it gets continues to sort of sway the crowd. But midway through the session, when the market really could have broken down sharply, stocks staged an inspirational rebound. Now, in part, the speculation that the Fed will do and say the right thing tomorrow. Of course, the Federal Reserve wraps up its FOMC gathering, and consensus is that there will be no action on rates, but perhaps greater clarity on potential future rate hikes. Now, the dynamics of the economy have certainly changed a lot since their last meeting, and there's a lot of concerns from consumer slowing, manufacturing slowing, the dollar surging. Of course, yields continue to edge higher, and all of a sudden commodities have taken off. This all calls to mind whether the Fed has too much power and who are they really looking out for. Joining me now to discuss, Lindsey Bell, CFRA research investment strategist, along with Nomi, Prins. She's author of Collusion: How Central Bankers Rigged the World Economy. Let me start with you, Nomi. It's your book, by the way, out today.
Yes.
The creature from Jekyll Island and their friends, I guess that's what we can call this. What are they doing to rig the world? The world, is it just the world economy or just the world in general?
Well, it's both because they're interrelated. Our world is our world economy. But the Federal Reserve in the last 10 years since the financial crisis has opened its gates, its doors, its books, and fabricated at the moment $4.5 trillion worth of money to buy assets. Central banks around the world have colluded with the Fed. That's why I use the term. It's the real collusion to add up to $21 trillion of money that's been fabricated to be dumped into private banks and then into the markets, which hasn't really gone into the real economy, hence the anxiety that continues to prevail.
You know, of course, we saw where the Fed created this phantom money, this, out of ether, and it didn't spark, Lindsey, what they were looking for all the time, that so-called virtuous cycle, right? It feels like we might have something more of a virtuous cycle, but it might be more organic, people keeping more of what they make, more job creation. Does this suggest that maybe there should be a smaller role for the Fed?
Perhaps. I mean, the Fed is supposed to be an independent entity anyway, but interest rates remained very low at zero for a very long time. They were pumping money into the system. Maybe it saved us from going into a deeper recession. But, hey, you know, I think what's going to save us going forward is going to be fiscal policy, not monetary policy going forward.
So this monetary policy, you've got the three main central banks who have been pretty wishy-washy and sort of reluctant to give back what they call accommodation. But they say they will ultimately do it. When you print $4 trillion or $21 trillion out of thin air, how do you get that into society once you take it off your books?
Well, that's the problem, and that's why there's these wobbles. That's why they're concerned about doing any other further movements or raising rates too quickly, because you can't really get it back without decimating the bond market, the people that borrow, the companies that borrowed on the back of cheap money, and it's very difficult to also get that from out of the stock market where it's been inflating into. So it's very hard to get into the real economy unless you make it get into the real economy. You can divert, you can ring fence some of the bonds that are on the books of the Fed and say, look, we're going to take $1 trillion, we're going to collateralize infrastructure building, we're going to collateralize creating jobs, giving people more money, and that would create a stronger foundational economy, to sort of Lindsey's point, going forward. So
Lindsey, does this mean that ultimately we're always doomed to these boom and bust cycles, depending on where these central banks are? In other words, tomorrow everyone's going to be nervous. If they hike rates tomorrow, the market's going to crash. Well, I mean, should we be at the mercy of the Federal Reserve?
Yeah, we very well should not be. I agree with you, but it seems like we are, and we have been since 2009, unfortunately, been at the mercy not only to the Fed, but also to central banks around the world. And that's where the major problem is going to come from going forward, because just as we're easing and we're raising rates, the ECB and Bank of Japan are also, coming into the fold here.
Let me ask you, Lindsey, what did you make of today's session? Did it mean anything to you? I was very, very impressed that we were nearing some key support points. We held again. And, of course, we're now in this sort of pennant formation. You feel like something's going to break one way or the other real soon.
Yeah, I was glad to see that the market ended in the positive territory, at least for the S&P 500 and the NASDAQ. But what we really need to see is investors get out of the weeds. They've been digging in there. The ISM report this morning, they found that one little negative, that input prices are at an 8-year high. Well, guess what? They've been rising for 27 months in a row. I think the economy is strong enough now to be able to withstand those types of things. We need to look at earnings at 21.6% for the first quarter, right. 20% for 2018. We are moving forward, and we're doing well. We're going to have GDP this year of about 3%.
That's pretty good. All right, so Nomi, before I let you go, your book, Collusion: Rigging of the World by these Central Banks. Is this sort of like the creature from Jekyll Island kind of notion that these central banks were designed to protect the wealth of the ultra wealthy and powerful?
That's right. I mean, even in the United States, 10% of the people own 84% of the stock market, and that just multiplies as you start to leverage into those situations. And it's global. The creature, Jekyll Island, our Federal Reserve that was discussed in 1910 and created by the Federal Reserve Act in 1913, it has now morphed into this sort of mothership of central banks, and as Lindsey mentioned, taking the Bank of Japan, the European Central Bank, other central banks along with it, to keep money at zero from cost perspective throughout the world, and that has major ramifications.
Like
it's
the
not
great Kraken with its tentacles around the world. All right, ladies, thank you both very much. I really appreciate it.